everybody. Welcome to the Stock Market Morning Prep video for Tuesday, May 6th. Sorry about the late video, just a little bit under the weather this morning, so it's a little tough getting my day started, but I do apologize for the late video. Hopefully you'll be able to see this before the market opens. Anyway, it's just interesting developments that are happening. We had weakness in the overnight session, Sunday into Monday morning, yesterday morning. Political tensions escalating. We had Chinese data came out, not so good. We had JP Morgan stating that they're going to be taking that 20% haircut on profits next quarter. So nothing really great, but yet again, the markets continue to be bid up. Now, that's going to end one day. It's going to end in a big way. We don't know the reason why they're doing it. Obviously, they want to continue to bid the market up, and the Federal Reserve, to me, is getting backed in a corner. However, we just have to continue to trade what price action tells us. And even though we have everything pointing to lower prices, you still cannot get overly excited to the downside unless we start really breaking lower lows and lower highs. And that, what I mean is that we gap lower and then we grind higher pretty much most of the day. And if you noticed in the indices, which I'll show you, we had 2 days down, 7 days up, 2 days down, 4 days up. So apparently there's someone out there saying that stocks are very, very cheap at these levels, which is ludicrous, but it is what it is, and as traders, that's what we're dealt with. However, we need to be very, very patient and nimble here. There's going to be some really big opportunity, I think, in the next few days, possibly to even a few weeks. We're coming into some seasonal weakness, and I'm going to be taking advantage of that and just try to work the best setups I can possibly. Then everything starts to move again. Remember, everything runs in cycles, and I do think that equities just don't go straight up. It's not going to happen. Something's going to trigger it, and it's going to trigger all of the longs that have been buying up at these levels. And then once that starts to break key pivotal lows, they're going to get out, and then the shorts are going to push it, and then we're going to have a violent sell-off. It's not healthy to keep these markets elevated the way they are. But that's not what we don't care. We just look for trade setups and the best possible entry. So let's do with that. Again, you know me, I always say when in doubt, get out. When in doubt, stay out. I'm looking for the best trade setups. Yeah, it's been boring, equities trading, but you're doing yourself a huge value by just sitting on the sidelines looking for the best trade setups. And if you do one trade or you don't do any trade for the day, cash is a position. Let the markets get easy. This is not an easy market at the moment, as you can see. Even this morning, we were up about 2-3 handles, and now we've sold off to be down 1. Not a big deal, but you can see the volatility starting to pick up here. And I do think that there are other banks that are going to start reporting, stating that we have major exposure out in Russia and Ukraine. If that escalates, then I think you're going to have a little bit of a bigger sell-off than we anticipated. Okay, so let's go right into the charts. I've been showing this to you for weeks and weeks on end, and as you can see, inverted head and shoulders with the neckline. We broke out of that neckline, and now we are moving higher. Now remember, I will tell you, in the bigger picture, okay, let me just, we are in a downtrend, okay, in bonds, and I do think bonds will revert back to the downside yet again, but not until we get a little bit of a flurry to the upside and we get that little bit of a sell-off that we're looking for. So remember, right now, bonds are making higher highs and higher lows. We have bullish symmetry on all of our moving averages. So that tells me that we have higher price in bonds. At one point, you're going to have lower prices in equities. There's just no two ways about it. You can't have bonds and equities go up. They can go up one day, maybe two, but you can't just, during the sell-off, bonds didn't do anything. We had markets moving higher, bonds didn't do anything. And when markets sold off, bonds actually rallied, obviously. So just keep that in mind here. Bonds is really important. Japanese yen, right? The spot yen inversely correlated with equity. So if you have a big pop to the upside, the equity markets will sell off. If you're looking at the dollar yen, obviously they are correlated together. But we're getting a little bit of a bid here in the pre-market session, and we're back into this ascending triangle looking for a breakout. There is overhead resistance, but if we can start getting some steam, that's going to put additional pressure on equities. Now, what I always say, this is what I'm seeing. That doesn't mean that let's get short. No. This is what I'm seeing. Let's get a trigger. Let's get the markets confirming, the price confirming that we are headed lower in equities and higher in the yen. Again, higher in bonds as well. Now, take a look. Interesting developments today, this morning, is the U.S. dollar breaking down. Now, the U.S. dollar, which I really like to see, that's starting to move pretty well here. And if you get the dollar continue to break down, you're going to see this big head and shoulders pattern with this descending triangle, and then we start moving lower. You're going to have a nice big push in commodities, and I'm looking at right now. Let me just get this right there. I'm looking at gold for higher prices as well as crude oil, and the lower dollar prices is going to put a bid in gold and crude, at least in the short term, and even really pretty much all commodities across the board. So let's just keep an eye on gold at the moment, and then obviously this is interesting developments here. Okay, now transport is holding up the best, as you can see, but we are sitting right on this big trend line support. So what I'd like to see is obviously some further weakness. See, and the reason why I like to see a full pullback is because the markets reset themselves, not because I'm a big short guy. I really don't care either way. How long as we profit from it. But it's very difficult when prices just do not sell off, and when you have this, that's just insane. Usually we get some pullbacks here, and we only had a couple in here, which is small. So yeah, you gotta stay what I'm talking about. But again, IYT, stronger of the five. IWM very weak, as you can see here. Yes, it bounced again, but it's still sitting on that 200-day moving average. Watch it, because if it does break that 200. I think you're going to see a big flurry of sellers come in as well in other indices that we follow. Here's the Qs. Now, just absolutely insane. We had Qs selling off, lower lows, lower highs. We had 3 days up, 2 days down, 7 days up, 3 days down, 5 days up. I mean, it's just absolutely insane. And, of course, that has something to do with it because of Apple. That shouldn't be heavily weighted in one stock. It's crazy. Not a good trader to trade in the Qs. Personally, even though we had some lower lows and lower highs, I'd be looking for something else to trade. The indexes are actually very hard because they're just all over the map. I mean, if you really looked at price action intraday, you would see what I'm talking about. All right, guys, that's pretty much it. So let's see if we can get some price movement yet again. I mean, we had a market lower, and then sure enough, that was the end of it, and then the market's kind of grinding higher all day. Another very boring session. I thought we would get some continued move lower, but we did not. So I do think that was going to be an interesting week. That's to say the least. Okay, be careful out there. Use your stops, and we'll speak to you tomorrow. Take care, everybody.